All right. Highlight for today is what? Couple things, and we're going to wrap it all together. In fact, people even told me do the highlight about this. Right in here, the market jumped. And we know that afterwards, but we knew it right in here. Why? Because we know what to anticipate following news and updates and headlines that dropped down the wire. And it was top Republican leadership. We're going to meet McConnell, Mnuchin, Meadows, all of them. So it was worth a jump. All right. However, there was some activity in here. Buyers came in and no longer could go up. There was a decoupling with the ES of making a higher high. I'm sorry, with the NASDAQ. The NASDAQ was showing weakness. Buyers couldn't get it to go up. You had some shorts that finally were puking. So, without getting into all that detail, the downside, not this much downside necessarily, but the temporary top could have been in. Then all of a sudden you see this thing rotate. And as soon as it gets down the middle of this, talked about, it's not a piece of news that cements in a stimulus or anything else. It's one of those things where they drop, or I mean they pop it, then they realize it's just same old stuff. But once they get through the middle of what you would call a consolidation box, there is when you can anticipate more downside. It's not necessarily easy to call the downside in that particular moment, but once you get through there, there's more. It's weak, right? Now, here's what's interesting. You have a move from that yellow dot to this yellow dot, right? And I had said this move is pretty steep and probably should get respected, which means you see it come in 50% and then roll back down. I could be wrong and not lose money. You could be wrong and actually make money. Because if you have good qualifiers to keep you out of trades selling a 50% retracement, qualifying with good order flow or good relationships, you stay out of the way, get off the train tracks in implementing your idea. What's important about good qualifiers is not the trades that get you in, it's also the trades that keeps you out of. Then there was a moment where it does stop temporarily up there and come off a little bit. But at that point, what's different? This is like a 70-80% retracement right there of this. So this is, let's just say it's a break of 20 ticks. Well, the retracement's 15. That's too many. And it goes back to what the owner of the prop firm taught me 20 years ago. He says, if the market was weak, look at it over here. Why would it rally most of it back in a short period of time? It's not weak anymore. So what I told people in here is if you're going to sell it, fading seems like fighting. It's strength because that X to that X was retraced. So if you're going to pick good locations, and there were some good locations to sell it and make money being wrong or not get killed being wrong. The point is you had to understand and recognize the changes in opinions. Your edge, your advantage, your ability to stay atop the competition is real-time analysis, analyzing when there are turns in the market, which means turns in what? Opinion. That's where the opportunities always lie when people change their mind, when other people change their mind, especially transitions, bullish to bearish, bearish to bullish moments that we talk about so often. All right. And so now it's just always nothing really showed us any kind of weakness in this market other than temporary tops by some of the order flow tools that we use. But this was just taking fundamental news, understanding why it popped, understanding why it could drop, understanding why it could drop more, understanding why it rallied too much. So it probably had some strength. Be careful selling it. All those things are not hard to understand unless you never put yourself in a position to understand them.